So what you want to do is have that intermediary who can take your vision and translate it so that what you get is then just a dashboard. So what this client sees once a month from me now is the thing she uses to evaluate how her business is running. And it's a lifetime value per client, and it's a cost per lead, and it's a cost per acquisition cost per client, and it's a total fixed expense number. But it's the thing she thinks about in the language she thinks about them, instead of me trying to force accounting terminology on the business owner.
Search, social, and mobile. These are the agents of change. Welcome to the weekly podcast where we unravel the mysteries behind digital marketing so that you can succeed and grow your business. And now, your host, Rich Brooks.
Hey everybody, this is Rich Brooks, and welcome to another episode of the Agents of Change podcast. This is episode 245, and we are powered by Flight New Media. Today's going to be a slightly different type of Agents of Change podcast, not in the format, but in the topic. Today, we're talking about my entrepreneurial Achilles heel. Finances. Wait, no, don't tune out. Don't flip to the next episode. This is good stuff. If I'm being honest, for years I had the belief that I didn't need to pay attention to my financials. I know that sounds stupid, right? That I didn't need to pay attention because I could sell and market my way out of any problem. And you know what? For more or less, that's actually worked. I did it. I survived over 20 years in business. However, it is exhausting. It was exhausting. It continues to be exhausting. So a few years ago, I started working with a local company in town that helped me do what I should have been doing since day one, focusing on the foundations of my company's financial health. Having a budget, forecasting, tracking my financial KPIs. Now I don't have to market and sell my way out of any problem. And I know things in advance. Things like when I can hire another person for the marketing team, or what hardware expenses I have coming up, and a bunch of other stuff. Like, should we buy a coat rack? I swear to God, that was something that actually came up. We did, by the way, in case you were wondering. I didn't want to leave you hanging. That kind of stuff is incredibly freeing. Well, today we've got Pam Pryor, the entrepreneur's accountant, here to talk about how you should approach your own financials. Now, before we get to that, I just want to mention that when this episode drops, there will be less than 1 week until we release tickets for AOC 2018. That's right, we are days away, assuming you're listening to this in real time, we are days away from announcing or releasing tickets for the 7th annual Agents of Change digital marketing conference that takes place every year here in Portland, Maine, and live online. You definitely don't want to miss this. I'll be sharing more information about this coming up, but for right now, the one thing you want to do, if you're not already on it, get on our mailing list, because that's how we announce it to the world. That's how you're going to find out sooner than other people, is by getting on our mailing list. And all you need to do, it's free. Just head on over to theagentsofchange.com. You'll see a bar at the bottom of every single page, and you can just join our mailing list, and you'll be one of the first people to know when those tickets go on sale. And I'll tell you that we only have 100 early bird tickets set aside. 33 of them are already gone because we sold tickets at last year's conference. For this year's conference, 1/3 of our early bird tickets are already spoken for. So try and get one of those last 67 of them. Otherwise, you're going to be paying more than you need to. Anyways, good stuff, but let's get to that interview with Pam. She's the author of Your First CFO, The Accounting Cure for Small Business Owners, and the entertaining and informative host of the Cashflow podcast. She guides entrepreneurs on the path from 6 figures to 7 figures with confidence and restful nights. As an entrepreneur herself, her mission is to bring a financial breath of relief to as many entrepreneurs as possible by removing the painful parts and giving them the comfort of knowing exactly and only what they need to know about their own numbers. Fellow agents of change, please welcome Pam Pryor.
Hi, thanks so much for having me. I really appreciate it, Rich.
Well, I'm glad to have you. This is definitely a slightly different take on what we usually talk about, but I think it's going to be fascinating. I'm looking forward to it. But before we dive into all my questions, just wanted to kind of bring people up to speed. How did you get to this place where you're an author, a podcaster, and you focus on entrepreneurs?
Thank you for that. Great question. I started out my finance career in industry. So, like a lot of us out here in this world today, I started out in Fortune 500, in fact, Fortune 50 in the financial field. So, I got my training in large industry. In between some of those jobs, as we sold companies or there were changes in ownership, I would take consulting jobs with smaller and smaller businesses. And what I found was I was getting a lot more excited about the work I was doing in the breaks than the work I was doing in industry. So about 2016, I took my final leap away from industry voluntarily and said, it's time for me to work with the smaller businesses. And that's where I came across this really energetic new world of entrepreneurs that I'm enjoying. Where I met you actually is in this circle. And everything I learned in corporate applies to these small businesses, but nobody is translating it in a way that it can be useful and that it's in English and that the owner gets relief out of their financial conversations instead of exasperation. So I started off with my publisher who read my ideal reader write up, my ideal target avatar, and said, oh my God, I need to hire you. And learned through her, this is Angela Loria of The Difference Press and author incubator, and I learned through her just how important this work was to more and more entrepreneurs. So this lit my fire, and it has ever since I left industry, and it's so much fun to see owners transform from being scared of the finances or bored of the finances to realizing, hey, this is fantastic. This is really useful stuff. And by the way, I happen to have a good gut feel about what my business is doing, and this confirms it.
Well, it's a relief to me to know that I'm not the only entrepreneur with a financial blind spot out there, because this is something I've struggled with. I mean, I've been in business for over 20 years, and it's still something that I feel like everybody gets but me. So I'm glad to know that there's a lot of other people in the same boat as me.
I can promise you that of the entrepreneurs I've spoken to over the last 18 months, and they're ranging from startups to, 8-figure businesses, 80% of the entrepreneurs are in the same, have the same feeling you do, or some version of it.
Yeah, I just never went to business school. So,
Exactly.
I was an English major, and I just kind of stumbled upon this because I like computers, and that ended up getting me onto the web. And so even when I've taken like those 2-day prior courses, that you go out and spend a couple of days with somebody, I walk out of there and I'm like, yeah, no, I don't understand anything. So I'm glad you're here to help us today.
Yeah, I'm glad you put it that way, because that's the way I think of myself, as a translator between accounting Greek and entrepreneur English.
Exactly. So as a small business owner, or as a marketer even, what are some of the key metrics that we should be paying attention to?
Yeah, so that varies a little bit, but on the whole, there is always a cost per acquiring a client, which is always key. And there's always cash flow. And that's the one that, quite frankly, is regularly overlooked. So one of the things I think is really helpful is for folks to understand and know that it's not just important how much you're selling, it's important how much and when you're collecting the money. So one of the key metrics is cash flow. And really all that means is each month you look at and predict how much cash is going to be in your bank balance at the end of the month. And you look out a few months based on what you're expecting in income and what you have in expenses, and you see how you're trending versus that prediction. So that is a key one. The other key one, and I'm skipping over the more obvious ones right now because I think everybody knows that, net profit, net income, gross profit, all the different things that they're called, and quite frankly, everybody has a different definition for in the entrepreneurial field. Those are some of the basics, but one of the things that we forget, especially startup entrepreneurs, is that if I'm going to get a certain number of clients, those individual clients are going to get for me a certain amount of value in the lifetime that they're my client. So let's just take a really easy example here. Let's say I sell one thing and it's a membership site and it's $100 a month, and I expect most clients to stay with me for 2 years. So the lifetime value of a client in that example is $100 a month times 24 months. So my lifetime value for that client is going to be $2,400. So what I want to make sure of is that I don't spend more than $2,400 to get that client. And that's called or client acquisition cost. So I want to make sure that I have something in place to know what my total lead generation spend is. And that includes everything from hiring an outsourced person to help you do your marketing, to your Facebook ad spend, to your Google ad spend, anything you're spending to acquire a client, and make sure that on the whole, it's not costing you more than that client's going to pay you in their lifetime.
And is it what they're going to pay me or what I'm going to make off of it? So am I paying attention to my gross revenue or my net revenue?
Yeah, you're actually paying attention to your gross revenue, but what happens is this, because when you look at your gross revenue, you back out all of your expenses. And what tends to happen is people back out all of their expenses except this one. So it's just one of the expenses you need to make sure you back out, and you don't end up at zero in total. That's a very good point. Every single one of your expenses can be looked at the same way.
Okay. So now, and this may be backing up a little bit, but I hear a lot of financial roles being thrown around in a small business. A bookkeeper, accountant, staff accountant, CFO. Sometimes these people may work for us. Other times they might be freelance. What are some of the roles, and what do I need as a small business owner?
So the most important ones that I think for most of what I believe your audience is you definitely need a tax accountant. And the reason you need a tax accountant is because they not only are going to file your taxes for you and get that headache out of the way, but they're also going to help you as you move through and succeed in business. They're going to help you figure out how to make the best decisions to minimize your tax rate. So that's a key one. Their role normally, and it varies, but all tax accountants will file your tax returns. You actually want to find a tax accountant who will also talk to you every quarter and help you take a look at what you think is going to happen in the year so that you can start making all the right decisions around how to spend your money. And I'll give you a really easy example here. And I'm not a tax accountant, so this isn't tax advice in any way. But the really easy example is if you're paying yourself out of your business, which I hope every one of you are, if you're paying yourself out of your business, there are a couple of ways you can do that. And one of them may be cost you 20% in taxes, and the other might only cost you 5% in taxes. So it's very important to have a tax accountant who knows your situation and can help you make those decisions and save a lot of money. So that's the tax accountant. The other thing is what usually happens is the tax accountant will pick a bookkeeper, and the bookkeeper will do all of the accounting, but they're doing it exactly for the tax accountant. So there's no attempt at all by the bookkeeper, because they don't really know any better, to put that information in a form that makes sense to the owner. And that's where it's so important to make sure that you define what your key metrics are and what you need to see every month to really feel comfortable that the decisions you're making are having the impact you expected. And that's how your bookkeeper should set the books up. And then the tax accountant can always figure out the taxes from the books. So what happens is a ton of value that you're paying for in the bookkeeper is lost because they're literally just serving the tax accountant. So those are the two key roles. Now, as a business gets bigger, you'll start to hear terms like staff accountant or auditor or controller or CFO. And really, the most broad of those is accountant, and there are a bazillion different kinds of them, but it essentially means somebody who's going to help start to tie the business information into something that's useful for the business owner. Because the bookkeeper's not going to do that, tax accountant's usually not going to do that. That's where you get involved with accountants, controllers, and chief financial officers a little further up the line.
So, and this is the part that I always struggle with. Like when I've looked at my P&Ls in the past, and I've looked at my my budgets and everything like that, I'm always, it feels like Greek to me. And so I want somebody to dumb it down for me. But how do I even talk to, whether it's an accountant or a CFO for hire or whatever, how do I even explain to them what I'm actually looking for? What would you recommend?
So what you've put your finger on here is the special sauce. When you're looking for a CFO, you want to first find somebody who listens to you. So I'm going to give you the example of the same client again. When I went to work for her originally, she said, "Here's what I think my business is." And I made her talk to me for about 2 hours about how she thought about her business. I didn't introduce an accounting term. I didn't talk about depreciation or accrual basis or QuickBooks. I just said, "Tell me how you think about your business." What a very good CFO will do is translate that into the language that the bookkeeper needs so that they can create some reporting, and then they'll translate that back into what the owner needs to see. So what happens there is exactly what you said. You don't need to know the accounting Greek. You've never needed to know the accounting Greek. But I can promise you, Rich, you've probably had a pretty good gut feel about your business. And when you look at that profit and loss statement, you go, this isn't what happened. This makes no sense. And it gets shoved in a drawer. So what you want to do is have that intermediary who can take your vision and translate it so that what you get is then just a dashboard. So what this client sees once a month from me now is the thing she uses to evaluate how her business is running. And it's a lifetime value per client, and it's a cost per lead, and it's a cost per acquisition cost per client, and it's a total fixed expense number. But it's the thing she thinks about in the language she thinks about them, instead of me trying to force accounting terminology on the business owner.
Okay, so I think I understand this. I guess part of it is we just have to explain where we see the company going, and then if we have that intermediary person, they can hopefully is it that they're organizing where our costs and expenses and revenues go? I mean, I know that there have been years where we said, okay, we do web design, and so that's a category. And then we said, well, there's web design, and then there's there's logo design, and really that should be separated out. Or, we used to say we do email marketing, which we still do, but now we kind of put it under content creation because there's a lot of copywriting involved, so it goes with blogs and some other things. Is that part of the changing story of what a business goes through?
Yes, and that exactly is what when I say that your finances should serve you instead of the other way around. When I'm in a room and I hear one of my clients saying, "Hey, we're thinking about expanding a service," or "I really want to think about all of this as product now instead of two different types of product," or "I'm adding a new line," I immediately go to bat and say, "Okay, here are the couple changes we need to make in the financial model." And boom, the next time they look at the numbers, that's all been reflected. The other big value that's added, even more so than just getting the structure right so that it aligns with how the owner thinks about it, is, for example, with one client, we were going to hire 4 people and add X number of clients. As it turns out, we're going to double the number of people we add and up the revenue. And we built a model so that we can drop those numbers in very quickly and immediately see the impact on all of those key metrics. So that's the other thing that having, a little bit more than a bookkeeper and a tax accountant really does help do. And that's the moment that hits when a lot of people in this world who have built a business and all of a sudden they're bringing in 7 figures. That's about that point in time when we should start having those conversations, so that it can be really useful to them.
This intermediary stage, I don't know if I should call it storytelling or what it is, but the interface between the owner's vision and the hardcore numbers, is there a way to determine whether or not we should be doing certain things in-house or outsourcing them? Because that's a question that I get a lot and a question that I face quite a bit too.
Yeah, in this world, quite frankly, to get an in-house CFO of the mind that I'm describing to you is a very expensive proposition.
And I'm not necessarily, sorry to interrupt, but I'm not necessarily talking about CFO. It could be something, in my business, it might be something like a copywriter or a designer. In other businesses, it could be something completely different.
Yeah. All right. So here's actually where the tax accountant comes in handy. So in fact, as you start a business, generally, as a general rule, and again, I'm not a tax accountant, but as a general, it makes sense to just bring people on as contractors, and they get, I think you're probably familiar with the term 1099 type income. And the disadvantage to them is that they have to pay self-employment taxes on it. If you hire somebody as an employee, of course, they don't have to pay the self-employment taxes. So they pay less, but you pay more. for the same amount of time. So the point at which it often makes sense to go from a contracted 1099 service to something in-house has a number of factors, most notably your business and how it fits into your business. But as an aside, or as one of the inputs to that decision, it's determining whether you've got enough of a cash flow, a positive situation to be able to take on a little bit more money than it otherwise costs to hire that person. Because once they're an employee, there's some additional costs that come into play. So you want to be in a pretty good spot before you start hiring W-2 employees. Now, backing away from that altogether, there are all sorts of laws out there around 1099 and employees that I'm not even going to touch on, but it's not a bad idea to get a good human resources or legal advice on this. Just get an hour phone call with somebody. Say, here's my situation. Here's the business that I'm running. What do you think I ought to do here from a legal standpoint? That way you stay out of trouble with people who want to, states that want to come after you for hiring 1099 employees when you should hire W-2. So in truth, in summary, it's a business decision, but there is definitely a financial component to bringing it in-house.
Okay. So you had mentioned earlier when you talked about some of the key indicators that we should be paying attention to, you really focused on two, and one of them was cash flow. So
Yes.
Explain to me, because I remember reading Rich Dad, Poor Dad and how he created an entire board game called Cashflow. Like, this was the most important thing, and I've never really wrapped my head around why cash flow is so critical to a small business. I mean, I know you have to have enough money to pay your bills, but it feels like it goes deeper than that, and it's just not clicking with me.
Yeah, it does go deeper than that once you get to Rich Dad, Poor Dad type status and investments, right? But in the very beginning for an entrepreneur, it really is as simple as you said. And the way I would put that is a sale's not a sale for you until you've collected the cash, when you're just in the startup stages or early stages of a business. So it really is that simple in the early stages of a business. You need cash to pay your bills and to pay yourself. So if you have a profit and loss statement that says you're making money, but you're not collecting the cash, you got a problem because you can't pay your bills and you can't pay yourself. Now, stepping back away from that and getting to where what he's talking about in Rich Dad, Poor Dad, is that cash is the way we exchange value, right? So if I have $1, I can invest it in you, or I can invest it in real estate, or I can invest it somewhere else. But in order to invest, I have to have that cash. And the person I'm investing it in has to be able to use that cash. And the bottom line is if our whole environment were on barter, you wouldn't need it. But it's not on barter. So this is the thing that lets you exchange value in our economy. And I should say today, because as we know with the whole blockchain event, cash could get a whole different definition here in the next 5 years or so.
So is there a amount of cash flow? Is there a formula that works for almost any size business that I'm like, okay, all I need to have is X percent of my receivables equals like this cash flow, or I need enough cash flow to run my business for 3 or 6 months, even if I didn't get $1 in during that time? Like, are there numbers or levels that should we be shooting for?
Yes, but they're not absolute numbers. So this is where a forecast really makes all the difference in the world, because in a business that needs to buy inventory and sell products is very different from a business that is selling coaching or a membership site. So there are formulas, but they're specific to the businesses. The overall sort of very broad formula is, and this sounds ridiculously stupid or simple, but it's real, is you need to predict how much money you're going to need to spend, and based on that, how much money you need to bring in, and then make sure that your model supports it. Now, a really good forecast, like if I were looking very specifically at your business, I would have 5 or 6 things that were driving that cash in and that cash out, and that's what we'd be dropping into a formula to get the right answer for you.
Okay. So it does sound it's a little bit more specific to the business.
It is, yeah.
What are some of the biggest mistakes that entrepreneurs make, in your opinion, when it comes to their business finances? Whether they're doing it and they shouldn't be, or whether they aren't doing it and they really should be.
Well, I think one of the biggest things that new entrepreneurs overlook is how much there is to deduct for tax purposes, and they pay tax bills that they don't need to be paying. So that's kind of one really big one. The second one is leaving the receipts in the shoebox for too long, because once the receipts are in the shoebox for a year, and then it comes time to have to file your taxes, that is a 3 or 4 day nightmare that the owner has to go through, and they hate it, and all they want to do is get it off their plates forever. So what ends up happening is they hire a bookkeeper without really making sure that the bookkeeper is going to give them all the benefit of those reports like we talked about earlier. And that bookkeeper is set up just to serve the accountant. So all the value of being able to forecast and predict and look at your metrics goes out the window in that scenario when it happens. So the new entrepreneurs, I advise, look, bite the bullet, get a bookkeeper, start doing it early. It's all automated now. Bookkeepers are not that expensive for a startup business. Let's go ahead and do it. So those are the two biggies, tax deductions and go ahead and get the bookkeeping started early. It makes everything so much easier in the long run and cheaper.
Great. Okay. Well, I know that we've just skimmed the surface because there's a lot here we can dig into. I'm sure people who are struggling like I am are going to want to know more. Where can we send them?
Thanks so much. I would love to send them to pampryor.com. It's www.pampryor.com, and it's PAMPRIOR. But right now, because there are so many entrepreneurs who are brand new, I've developed a program and running it called Profit Plan, which takes only the essentials for startup entrepreneurs that are in that $50,000 to $500,000 range and gets the essentials in place. And we do it while having a lot of fun. So to get to that, you want to go to www.grownupbiz.com, grownupbiz.com.
Fantastic. Pam, thank you so much for stopping by and sharing your expertise.
Rich, I really appreciate the opportunity.
If you're a first-time listener to this podcast, you may not know this, but we do a full transcript of every single episode, and today is no different. If you head on over to theagentsofchange.com/245, you'll see the full transcript from today's show and all the links that Pam shared with us. So go check that out. And while you're there, if you're not yet on our mailing list, this is the time to take care of that. Just click on that link, sign up, and you'll be one of the first people to get the alerts when we start selling tickets for Agents of Change 2018. Very limited number of early bird tickets, so you don't want to miss out. Jump on that right now. Well, that's all the content we have for this week. Talk to you again in 7.
That wraps up another Agents of Change podcast. Join us next week for another auditory adventure where we tackle search, social, and mobile marketing.